Most of the Asian markets are higher in trade today. The Taiwanese index is up around 112 points.
On the way down, the 20-day moving average for the Bank Nifty stands at 43,597, which should not be broken.
ICICI Bank's board has now approved increasing stake in Lombard by 4% in multiple tranches.
First tick that you're seeing on the index and looking pretty good. There's a century straight off the back.
This is an economy humming after a year and a half of rate hikes. I think the outlook is extremely positive.
We expect the SUV industry as an industry to grow a little over 10% in F24.
The economy is slowing, but clearly it's not slowing as fast as would give comfort to the policymakers.
The Nifty is inching towards it, but you pull up that intraday chart and you would see the first rally on the Nifty has been sold into.
It was an operational loss this time around, one-time loss of 9,235 crore rupees that the company reported. It is related to some tax disputes.
Around $300 million is the estimated outgo cash flow post successful completion of the transaction.
Continues to see an up move, 107 points higher on the Nifty. We've seen some, it's actually been consolidating around that range.
Well, that was a day so far. You're with us here on a fresh new edition of Closing Bell Monday afternoon, and things are looking quite solid. I'm Prashant. With me, my colleagues Rima and Nigel. Nigel, of course, is making a presence here in the studio, not on the newsroom floor. Guys, hi. Good afternoon. Things are looking, pretty good, and they've been looking that way since the morning. Maybe off by 20-30 points from the day's high, but just look at that. I mean, I think it'll tells you how strong and steady it has been from the time that we started this particular trading session. Banks, by the way, are the ones which are doing the best. I mean, if you take a look at overall what's going on, I think the Bank Nifty making a new all-time high in the first, actually right at the word go, and then actually adding another 100 points from that point on. As we begin the last 60 minutes, on the Nifty Bank, there is a slight drop-off which is starting to appear. We'll track that if that builds into something more. Otherwise, broader markets have been looking solid. It's a big volume-led up move once again for so many mid and small cap stocks out there. And I think that is quite heartening to see. And in the US later today, I think, the question whether US itself is starting to catch a bit of a momentum on the upside, I think will be will be the key question, because, the S&P, the NASDAQ, both are they're both basically above their February highs very comfortably now. So are we starting a new phase? The debt thing, of course, still hangs in the balance. There is a vote which is to be conducted. The US Parliament, the Congress has to vote yes to it, and that comes up only on Wednesday, so we'll know when that happens. For now, things are looking quite okay, notwithstanding the last 5-7 minutes kind of drop-off that we're starting to see across these indices that are up on your screen. Rima, hi.
Hi. So Europe is in the green, but it's not a roaring rally.
Yeah.
Currently, you've got the key European indices up close to about 0.1, 0.2%, extending up to 0.25% gain. So in the green, holding on to a positive bias, but not a big rally that you would expect once, you pretty much got a resolution on the debt ceiling issue, which was an overhang on our markets for at least a week now. For our own markets, there have been lots of ebbs and flows, right? There have been two, slips from the top of the trading session, two recoveries, and once again, markets are getting a tad bit choppy. The Nifty intraday high was a level of 18,641, which means we're about 50 points away from that high. But the month of May has been very solid. The mid-cap index has rallied 5.5%. The small-cap index has seen a rally of close to about 4% so far this month. And today has been all about individual big movers. Look at Nucleus Software. Reported numbers on Friday, two back-to-back days of an upper circuit of 20%. Numbers are good, but look at the re-rating that we've seen on the stock. On the flip side, City Union Bank, some NIM compression and the street has slammed it. The stock is down close to about 10%. Greaves Cotton, there is some concern about the FAME subsidy. That stock is down about 8 to 9%. Balkrishna Industry, top-down miss. The stock is taking it on the chin. So it's all about the individual movers. There's another one, Bajaj Hindustan, reported numbers sometime back, and now you are seeing big buying in that stock.
Rima, earlier the call this morning was if you're going to get a gap up, it's better to take some money off the table because you have a lot of big cues that are lined up, and a couple of factors played out. One is the PCR. It was at around 1.37. That's the higher end of the band. The dollar index has continued to show strength. That's at around 104.2. And the probability of getting a Fed rate hike in June has gone up big time. So put all those factors together, when you got that 120, 130 point gap up, it would be good to take some money off the table. And as we speak, the Nifty is virtually lower. So I think that call has worked pretty well. Tomorrow we come and we'll reanalyze it. But for the time being, some money being taken off the table. Individual stocks as well have taken a bit of a knock. And also the mid-cap index, that's been underperforming all through the trading session. So just pull that up for you. And the advance decline ratio as well, you had way more number of stocks that were advancing in comparison to number of stocks that are declining. Now those lines are getting a little bit closer to each other. So I'm telling you that today was the day when maybe you wanted to book some profits and enjoy the rest of the trading session. But let's run you through first up what we have lined up on the show for you. We'll put the spotlight on some mid-cap stocks. E-clerks and nuclear software, well, they're surging in trade. What's hitting the stocks? Details coming up.
ICICI Lombard surges after ICICI Bank's board approves increasing stake in the insurance arm by 4% in multiple tranches. All the details that you need to know coming up on the show.
Sources tell CNBC-TV18 that Federal Bank may be looking at raising capital from a large QIP. Details on that exclusive story coming up on the show.
And ONGC is the biggest Nifty loser today. The company reports a loss of 248 crores after providing for a one-time of more than 9,000 crore rupees for tax disputes. Key excerpts from our conversation with the management on closing bell today.
And finally, we'll discuss the way forward for the markets and top portfolio bets with our Alpha Manager of the Day, Sridhi Bhattacharya of Edelweiss AMC. All this and much more in the next 60 minutes.
Okay, well, that's what's lined up here over the next 60 minutes. But how should you position yourself in the last hour of trade? Mitesh is with us with closing strategies. Mitesh, hi. Good afternoon. I mean, 101, 102 points, so 18,600 plus, looking pretty solid still. What's your sense, Mitesh? Will we catch more momentum uninterrupted on the way higher? Or at the margin, perhaps there will be some profit booking, etc.?
Good afternoon, Prashant. Looking at the overall setup, the odds are in favor of continuation of this rally. There can be an intraday dip, which is what we have seen today as well. I think we got a high of around 18,640. We tapered off about 35-40 points, but that's okay. You might get another 30-40 points on the downside. So the good way would be to proceed further would be to identify a level where you would want to trail your stop losses to. My understanding suggests that 18,520, 520 is a good support area. So maybe 10 points below that. So about 90 points lower from here is your stop loss, 18,510 on this spot. And the target which I'm looking at is possibly a retest of 18,700, which is the highest weekly closing we ever got as the one pivot area. But good chance that we'll get the highest closing, which is about 18,812, also being tested. So we're staying positive unless until 18,510 goes. The Bank Nifty, since it's trading above this level of 44,150, I think that should also aid the index. So either the Bank Nifty starts falling below 44,150 or the Nifty trades below 18,510. I think till then, clearly the buy should be on the upside. On the stock side as well, therefore I have two buy calls. Ultratech Cement is a buy with a stop below 77.95. Look at 79.50 as the near-term target, though I suspect eventually we could look at higher levels as well. And Bharat Forge, after a long time, has come on the buying radar. The intraday charts are very good here. Buy this one with a stop below levels of 774 and a target of around 805 can be looked at.
Okay, thank you very much for that. Let's talk about ICICI Lombard. That's surging in trade after ICICI Bank decided to increase its holding in the company by 4%. The street was worried that ICICI Bank instead would bring down its holding from 48 to 30%. That would have created a stake overhang, a stake sale overhang, but instead ICICI Bank is looking to up its stake. Surabhi joins in with the details.
Hi, Rima. Thanks for that. So, as you said, ICICI Bank's board approved increasing stake in Lombard by 4% in multiple tranches. They said they would acquire at least 2.5% stake of the 4% before September 9th, 2024. Now, just to give you some context on this, the bank currently holds 48% stake in Lombard, and post the merger with Bharti AXA, ICICI Bank had to bring down its stake to Lombard to 30%, and that was by September 2024. But earlier in April, RBI allowed the merged entity, HDFC and HDFC Bank, to hold more than 50% stake in HDFC Life, thereby creating a precedent. So now all eyes were on ICICI Bank bank whether they would increase the stake to over 50% or bring it down to 30%. Now that they have decided to increase the stake over 50%, it removes a stake sale overhang from ICICI Lombard, and that's why it's surging in shade today.
All right. Thanks very much, Surabhi, for that. So that is ICICI Lombard for you. Deepak Shenoy is with us, founder at Capital Mind, is joining us now to take some questions. Deepak, good to have you here. Thanks very much for your time. We're going to start with ICICI Lombard, which is seeing perhaps one of the largest moves of its listed life with that 10% surge. We had, by the way, Saurabh Mukherjee of Marcellus with us earlier, who's owned the stock in his portfolio for a while, and he thinks, it's a solid business, no doubt, and things are coming together for the company as a business as well. What's your sense here?
So, as a disclosure, we own ICICI Bank. So, in a complex way, probably a little happy because it's a downstream positive for ICICI that the stock price goes up. But also the core business of ICICI Lombard, I think, terribly underpenetrated in India. There's a lot of growth factors here in their favor. However, because it's general insurance, the instances of let us say, from at one level fraud to another level, under insurance by a lot of players that should otherwise be taking it, that tends to kind of skew the industry's economics against it, especially in bad times. But recently we've seen an increase in premiums, especially on health with respect to COVID. We've seen more of, as auto sales grow, there will be some growth there in that channel as well. I haven't analyzed ICICI Lombard's business per se, but in general, the general insurance sector should do well over the next few years. For something that's more fledgling as an insurer like ICICI Lombard, I think you'll have to wait for 5 to 10 years to see the real economics play out. But they're one of the strongest in the territory. So I think, good things. But this development, I think, is more positive for ICICI Bank, to be honest, because this stake sale would have created a massive rub-off on the stock price on the remaining 30% that was to remain with ICICI as well.
Deepak, hi, afternoon. Rima here. Wanted to get your thoughts on two mid-cap IT companies. One of them is Nucleus Software. And what an up move the stock has had post its numbers. Numbers came out on Friday. The stock went up 20%. It's followed it up with another 20% up move. It's a fresh 52-week high, and the stock is up 150% since the beginning of the year. Now, the conference call is scheduled at 3 p.m. today, so that's when we'll get greater clarity. But the Q4 numbers look very strong. 22% quarter-on-quarter, 35% on a year-on-year basis. Margin expansion has been solid. 40% margin expansion. Just look at the previous margins for the company. They used to be 16%, 12%. In Q3, it picked up to 28%, but now they've hit 40%. And for the full year as well, the company has clocked in a good revenue growth of 25% with 27% with EBITDA margins of 25%. eClerx is the other one. Now here, all the excitement is centered around the new CEO and MD announcement, Mr. Kapil Jain. Now, up until now, eClerx's top management were the promoters, the founders. But now for the first time, they're going to have a professional CEO, Mr. Kapil Jain, who came in from Infosys. He was actually hired in the month of April, but that time the understanding was that he will be the UK subsidiary CEO. But now when they announced their numbers on Friday, they indicated that Mr. Kapil Jain will be the group CEO. So there is clarity on the management. The number 2 point about eClerx is the valuations are not expensive versus the rest of the pack. It's trading at 12-13 times forward multiple. That said, the Q4 numbers of the FY23 guidance is quite subdued. The company was uncertain about hitting double-digit growth. In fact, they even hinted that Q1 revenues could see a negative growth, a decline in revenues in Q1. So they are facing a lot of business disruption. And that's what the street is worried about. But all hopes are pinned on the new CEO MD announcement, Mr. Kapil Jain, for eClerx. Deepak, any thoughts on Nucleus or eClerx?
So we don't cover either, Rima, but here's my, the Nucleus numbers were quite interesting. They actually have had a very bad year in FY22 with only 7% margins or so. I think now that's come back to the more respectable 25%. In fact, 25% is is extremely good for the IT services business. So I think they're getting re-rated from a PE perspective, and also perhaps from some kind of estimates of growth. I'd be a little wary of that because 2 years ago they made, from 2 years ago, the total earnings growth is only about 15% or 16% absolute. So that's not, too much to rejoice though the last year numbers, since they were lower, it's the base effect that's caused, I think, a re-rating of Nucleus. But having said that, the stock also hasn't done anything for, I think, nearly quite a bit. So it's kind of getting re-rated upwards now because of growth expectations. As you said, once the conference call is done, we'll have a better view. eClerx, I don't have a view. I know it's a very interesting company. It's probably a better play on the price of the stock using technical parameters than, for me at least, because I haven't looked more deeply at the fundamentals at this point.
But do you think broadly the segment eClerx operates in could be the hardest hit by, say, generative AI and the chat GPTs of the like?
Rima, I think my view is that if we look at the concept of AI, we think of it as it'll take away jobs. But almost every time that we've had technology that is supposed to take away jobs, it increases the jobs. When we thought people would digitize, we would think that the usage of paper would reduce. It has actually increased over the years, not reduced. We thought that jobs would go away because of technology. Typewriting jobs would go away. PCO jobs would go away because of cell phones. All of that stuff has just not happened. There's been more jobs in perhaps related areas, not exactly the same area. But I think what will happen in the end is eClerx will develop enough internalized skills as well to be able to harness AI to go to their customers and says, we'll do it for you using AI, and perhaps even increase their margin profile using it. So it may not necessarily spell doom for the companies involved. Employees will need to reskill, but I think AI will only create more opportunities, not less. So regardless, I mean, there may be a short-term impact, but I think any company will gear up to it. Every company is talking AI now. I'm sure they're also on top of some of these things ahead of what we are thinking from the outside.
All right, Deepak, stay with us. We'll take a very quick commercial break. We'll be back. We'll also have Tridi Bhattacharya, Chief Investment Officer at Edelweiss Asset Management Company, on the other side for some more conversation. Stay with us.
My journey of insurance and investments began at the same time, when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ.
ट्रेडिंग shouldn't feel like this. इसलिए हमने बनाया ICICI Direct Flash Trade, जो देता है clutter-free experience, quick entry और exits, live tracking के साथ, सिर्फ ₹7 per order. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Okay, welcome back for the markets. We're almost at 18,600, but just shy of that. We're up close to about 0.5% on the benchmark indices. Deepak Shenoy is still with us on the show now. Deepak, any other stock which you have a lot of conviction at these levels? Because people are worried about investing at levels of 18,500. They've got the memory of the last 2 years when, markets have done very well. So at current levels, any one or two stocks where you have a lot of conviction that you would recommend to our viewers?
So, we can't recommend stocks. So you'll have to treat this as more like I own them, so I'm talking about them kind of thing. But Rima, we've had a big position in LIC for the last year or so. We've been building it up over time. And I know it's not very popular to say this, but this is a company that just turned out a 36,000 crore profit. It's going to be among the top 5 or 6 most profitable companies in India. It's in a market cap of what, 380,000 crores. So my conviction in that seems to be, it seems to have played out. When it came out, it had only about a 5 or 6,000 crore profit last year. We were surprised by that, but we were like, okay, once they get the accounting proper, they will be able to report the higher numbers, and they have. I think while the insurance market itself the life insurance market is currently going through a flux because of the tax changes. I think this is one of the largest players, one of the most aggressive players in town. They are a PSU, so you'll have to give them a little bit of a discount. But currently they're trading at 60% or so of their embedded value. They're trading at 10 times earnings. And because it's so mature, you can look at those earnings from a mature insurance perspective rather than just as a multiple of value of new business. Because you have such a tremendous amount of repeat business also that's coming into LIC. My confidence over there is that as India grows in terms of financial penetration, you're going to find that insurance, which by the way, LIC manages more assets than all of the mutual fund industry combined. So from that perspective, they're a relatively large force in the financial intermediation space. So I think as India's financial penetration grows, more financial assets will come, more insurance assets will come as well. So just my little vote of confidence there. I know it's probably too small to make a difference, but again, risks are, of course, the government will have to divest another 20% over the next few years. People don't like PSUs, and of course, there could be governance changes or issues which hurt shareholders. But just my.
Okay, good to hear, Deepak. We like to hear about some unpopular names. After a while, I've heard this one, LIC. But let's see how that goes, and all the best with that investment. But let's focus on a couple of other names then. BHEL, that stock is getting in trade even as brokerages have a mixed view on the outlook. Vivek is with us to tell us why the stock, as we speak, is at the high point of the day. Vivek.
Well, absolutely right. So what's actually happened is while Q4 was quite soft, post the conference call, management has given some commentary as to how the ordering activity is looking like, both in terms of the power sector and also the other sectors. And, brokerages have come out with quite a differing view. But today it appears that, the bulls have taken charge as far as BHEL is concerned. So first up, let's have a look at the key takeaways as far as the call was concerned. Number one, the management said that the demand for coal-based plants has picked up on back of an increase as far as industrial activity is concerned. And they're saying that they are favorably placed in, immediately 3.7 gigawatts worth of orders. The other takeaway was that, because the company had to go ahead and reduce its bid in order to get the Vande Bharat bid, they're saying that the margins at this point of time in the execution of the train set would be quite challenging. And, the other important thing is that because they had to match the lowest bidder, they will only start making money as far as the operation and maintenance part is concerned. After the call, we have a couple of brokerages that had, their views. So Antique has maintained its buy stance on the stock. What they're saying is that they're expecting the company to witness a meaningful reversal as far as ordering cycle is concerned in the next 3 to 4 years. They're expecting earnings to climb up almost 5-fold, aided by strong ordering, improved execution, as well as operating leverage benefits that is expected to kick in. So what they're saying is that they're expecting BHEL to report an annual average order intake of close to 60,000 crores versus just around 25,000 crores in the last 3 to 4 years. On the other hand, CLSA has maintained a sell stance. They believe, that India's net zero pledge, benign thermal capacity addition, and challenges of diversification, especially given the company is getting into sectors that are very high competitively intensive. They believe that prospects there are quite muted. So on the back of that, a mixed outlook as far as BHEL is concerned, but the stock is gaining in today's trading session.
Okay, all right, Vivek, thank you very much for that. I mean, the stock's done well. It's picked up actually. Especially in the second half of the day. Now, Mahindra & Mahindra has been one of the top gainers on the index, at least on the back of a strong fourth quarter set, and generally very upbeat kind of guidance across businesses, except maybe tractors, where the company is saying that they will update their guidance for FY24 as they go along. Right now, growth guidance there is in the low single digits. Rajesh Jejurikar, Executive Director and Chief Executive Officer, Auto and Farm Sectors at Mahindra & Mahindra, was on the channel in the morning. We spoke with him, some of his commentary. Let's play it out.
We expect the SUV industry as an industry to grow a little over 10% in F24, and we would, I'm sure, gain market share in the year. We are ramping up our capacities. We've already reached a capacity of 39,000 per month. I think when you hear the industry growth numbers from other peers in the industry, they talk about everything, including passenger vehicles. Since we don't play in the overall passenger vehicle space, we play in SUVs, which is now 50% of the passenger vehicle space. We expect that industry to grow at about 10%, and we would expect to do better than that. I think there is some stress at the lower price points, which is the reason why the overall passenger vehicle market is not seen to be very buoyant for F1. So tractors did see a good industry growth. Industry grew, I think, around 12%. We grew around 15%. We gained market share. Actually, we gained 3 share points over the last 2 years. We expect the industry to be in low single digits this year.
Okay, well, that's tractors, but UVs, SUVs are just exploding. The waitlists are so long. Deepak, I know you were in Goa recently. Did you drive it?
I did, and I was hoping to have driven it on an M&M vehicle, but it's been 7 months and I'm still waiting.
Oh, you're still waiting? You're the wait list.
It's November before I get it, so I'll tell you in December if I have.
I know so many people who waited in 6, 7, 8 months. That's been the general wait list for some of these, Mahindra vehicles, and the total backlog kind of says it all. That the demand seems to be very, very strong. Any views on the stock though, Deepak?
So we own the stock. Honestly, love the company from a perspective of it's one of the most natural place for both the commercial vehicle part of the business and also the passenger vehicle SUV, the utility vehicle part of the business. So I think they're good on that. The technology-wise that they've gotten, I mean, earlier it was that Mahindra vehicles were not considered to be that good in comparison with the others, but now you see some of the features and some of the finishing, and it's improved dramatically, and the ride quality and the quality of the cars itself has improved to a point where you can compare them with some of the European vehicles as well in terms of features and stability and so on. But I think valuation wise it's not very expensive, so but again we own it, so I'll obviously say that. But they also have a bunch of this ownership part of the other businesses as well, where they're starting to try to get a handle on this. I think they're selling about 3% in Mahindra CIE. That will improve the ROE of the M&M part of the business itself. And they also have ownership in Mahindra Holidays, Mahindra Life, Tech Mahindra as well. So that's another part of the business. I think the sum of the parts here is greater than the whole, but only time will tell if they're able to demerge the holdings away from the core operating business. Still, I like the business overall as it is, and I think India is, relatively underpenetrated from a vehicle perspective. Given the fantastic roads, I've been driving around everywhere, and I can tell you this: we don't use our highways enough. Glad for that because of less traffic for me. But I think the times will come where we will have a lot more people traveling the highways, and they will want the bigger vehicles as well.
Deepak, thank you very much for joining in. The numbers that the street likes in M&M has been the SUV order bookings and the backlog. It currently stands at 292,000 as of 1st of May, which compares with 266,000 as of 1st of February. We're talking about a 9% increase, and the company is saying that we're seeing 57,000 of fresh bookings per month. So that's the SUV demand and the kind of order booking M&M has seen. We'll also invite on the show now our Alpha Manager for the day, Trideep Bhattacharya, CIO Equities at Edelweiss AMC. Trideep, afternoon now. Thank you very much for joining in. There's a lot of excitement about mid-caps, and mid-caps have had a phenomenal rally. Your mid-cap fund AUM is close to about 3,000 crore rupees, 2,800 crore rupees. Can you give us an indication in the last 1 month, which are the stocks that you've added on where the numbers look good, where your conviction is very high on the mid-cap or on the small-cap end of the universe?
Yeah, so great question to start. I would say that over the last month or two, one of the things that we noticed was that the valuation differential, which was earlier loaded in favor of large cap and was against mid and small cap, came to a more reasonable levels over the last couple of months, and hence mid and small cap as a basket has started doing well. And also we've we've been recommending from an asset allocation point of view to our customers that broadly now might be the time to allocate a little more towards mid and small cap overall as well. That's the first thing that I would say. Second, I would say that the market is also getting the whiff that in and around current levels, the interest rates have broadly peaked, or maybe there or thereabouts. And when that happens, then the slightly higher risk buckets of the market start to do better, which is what we see in the form of mid and small cap name. So I see a bit of relaxing macro conditions more as a reason behind mid and small cap names rather than really kind of, bottom of stupendous earnings. But the areas that have done well for us in mid cap would be broadly the manufacturing part of the sector, which is industrial, capital goods, and the likes. And there, the companies that we own, without getting too specific, have actually beaten consensus earnings estimates anywhere to the tune of 20 to 30%. So we do think that that part of the economy is really kicking, at a very phenomenal pace. And that's by and large what has helped us in our mid-cap fund overall.
Hi, Trideep. Good afternoon. Trideep, the problem pocket has been rural India, right? Are you seeing signs that that's turning around a little bit? Because that's really, we are talking about the urban consumption story, which is good. Parts of rural India are still in pain. But in a run-up to election year, general election year, hope is that maybe the spends increase out there with the kind of push that will be given from the central bank, from the central government. What's your sense? How do you see things shaping out here? And will you look to play that theme?
Probably kind of, will resist a bit longer. And the reason why I would say that is because, yes, overall over the last year or so, the rural focused stocks have not been, have not really had their time in the sun. And also, as you say, the construct is such that as we head closer to elections, there might be rural spend. But on the other side, if you look at, let's say, monsoon and rural part of the economy is to a certain extent driven by monsoon, then, the presence of El Nino as an effect could impact the earnings of these companies for a little longer. That's one. Second, while inflation in general has peaked, my sense is that it might be a little more stickier than what most people think. In that context, we think that a stickier inflation impacts the rural part of the economy a little more than the urban side, just because of the percentage of their free cash flow that comes from staples, etc. So both of these put together makes me feel that the near term, i.e. the next couple of quarters, could see continuing weakness on the rural side of the economy, and hence would probably wait for a little more bargain to occur before we kind of play the reversion to mean hypothesis with regards to rural. overall, our portfolios at the moment would be kind of, overweight manufacturing, underweight consumption, and within underweight consumption, we would be probably underweight rural part of the economy in a meaningful way.
Okay.
Okay, well, Swadeep, stay with us. Lupin is the other one we want to just quickly touch upon. It's surging in trade. Ekta is here with details. Ekta.
Thanks for that. Well, yes, Lupin is at a fresh 52-week high in today's trading session. The news with regards to Lupin, or the latest news, is that they have received approval from Health Canada, which is the Canadian regulator, to market a generic version of Spiriva generic, which is basically an inhaler drug. Now, this could be read as a sentiment boost simply because the street is awaiting the approval of Spiriva generic in the US markets quite closely. Now, as of Q4 FY23, what they had indicated the markets when it came to Spiriva generic is that the US FDA has provided a target action date. So that means that there could be any kind of indication from the US FDA by July, which would be without an inspection of any of their facilities, and by August with an inspection of Lupin's facilities for Spiriva generic. Now, the latest queries raised by the US FDA are procedure related. The management has said they remain optimistic of a first half FY24 launch. Remember, it's an important drug for them. They are expected to have a less amount of competition in this drug. The gross market size of it is around $1 billion in the US.
Okay, well, Ekta, thank you very much for that. Swadeep, let me throw it across to you. Lupin and other sort of pharma names. Which ones do you own, and what's the thought process across the space?
I think the pharma looks actually quite interesting to me. Overall, our stance on the sector has been neutral, but within that, our stock selection has done wonders for us. I mean, while I'm not allowed to name stocks here, I think on the fact sheet, particularly some of the mid-cap oriented names have driven a good bit of alpha, even though the sector has not gone anywhere. But overall, if you were to ask me from a sectoral standpoint, I think the sector saw the boom at the time of the COVID, normalized earnings in the subsequent 1 year, and now, if you ask me, offers a decent valuations when the US generic pricing is gradually kind of easing off. So again, stock specific, but I think the sector is an interesting juncture where stock selection could make a difference over the next 12 to 18 months. At the moment, our stance would be more neutral in our portfolios.
Tradeep, coming back to that point about capital goods, and manufacturing, the theme that you're very bullish about, Cummins is one of your big holdings. The numbers look pretty good. The stock has rallied. But there are concerns broadly about the valuations of the sector. So would you recommend buying, these stocks at current levels, or would you wait for, better entry points?
So I think it's a great question. I would say, beyond a point, we are earnings junkies. We look at where the possibility of earnings upgrades are, and that is where we queue up. Some of these companies, without getting specific, have beaten the consensus earnings estimates in the last earnings season was anywhere between 20 to 30%. As long as we see that sort of earnings beats to come through from companies in the capital goods industrial segment, you would see that companies appear expensive, but on the back of estimates that are about to go up. And hence, as long as the earnings estimates keep going up, the stocks will probably kind of, follow them. So we follow the framework that we follow at Edelweiss Long Only MF is certainly to look at potential areas of earnings upgrade and stay put there. For example, within industrials, defense is another area where we've seen some of the companies beating earnings estimates meaningfully. So various parts of the industrial goods, not just one sub-segment, have been doing well. And fortunately, we've had decent exposures to them.
Through the final question from my end before I let you go, ITC, flashing for our viewers on the screen, the most ignored stock and the best performing stock in the last 12 to around 18 months. So the sense you get is something's got to give now. The numbers have been showing up. I don't know whether that long-awaited some kind of intent or corporate action can come about. But that's part of your portfolio. What's the view from here on?
I think the stock has done phenomenally well. About a couple of years ago, we spotted that on the back of ESG concerns, certain segments of the market were looking underpriced, even though there were earnings upgrades happening. The multiples were unduly depressed because of some of these ESG-related worries. And I think while we are mindful of ESG, we wanted to sort of, align ourselves more towards earnings upgrades as I was talking overall, and that has worked well for us so far. With the amount of volume growth in some of these segments, which have come in double digits, I think as long as that continues, we will stay put. But overall, I think the stock has done well. We are probably not adding incremental weight there as we speak in terms of the staples part of the segment. Overall, as long as the earnings upgrade come through, we are not kind of, taking our bets off either. So that's where we are on the consumer staples in general, and maybe a few stocks there or thereabouts.
Well, it's been a good call, and it's worked quite well for you all. But as you said, you'll be continue to track the earnings, though you won't be adding on incremental weight on this one. Just looking at the screen, the sense is maybe this year is the big year for ITC. Let's see whether or not we hear something from the management. Thanks so much, Sudeep, for stopping by and giving us your view on a whole host of stocks as well as sectors. For the time being, though, we'll slip into a short break. On the other side, we'll continue our focus on the markets. We're still up close to around 100 points. We'll get you some buy and sell calls.
It's time to break free. Break away from the routine to the greens and get lost in the world within. To steer through, to stop, start again, go forth, and just let it all go. With JK Tyre's Ranger 80 for the ones who are wild at heart. JK Tyre, total control.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes. But your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
We don't just create new standards. We create new priorities for the Indian car buyer. In fact, we make the whole world of India's mobility new forever.
You know, I was a bright student. I wanted to do something, to be someone.
Why not start something of your own? Start a business. That would require a big investment.
Zero investment.
Zero investment?
Yes, I am doing it. I am.
Principal, madam.
She's my client. I am an LIC agent. Now think big. Become an LIC agent. Visit our website or contact your nearest LIC branch.
Welcome back. Come off the high point of the day, but still holding well in the green. A few stocks, though, that have moved a little bit lower in the last few minutes. ICICI Bank, well, that's virtually at the low point of the day. That's a larger weight, so I'm spotting that one. HUL is the other one in there. That as well comes in the top 10 in terms of weightage on the Nifty 50. So that as well has moved a little bit lower. But on the flip side, you have big boy HDFC that was showing some bit of nervousness. That's moved a little bit higher. And Titan was expensive, is expensive, and dare I say, will always be expensive. Titan now as well spikes. It's moving towards that 3,000 odd mark. Mitesh Thakkar is back with us. Mitesh, what buy or sell trades you have for a reverse trade?
So I have a BTST on Coal India. I think that's closing very well. So BTST here with a stop at 243 and look for a target of around 250 to 253 for tomorrow. And cash stock as a trading call, Anantaraj is closing at the day's high, good volume and setup. So buy here with a stop at 147 for targets of 160.
Thank you very much for that. Let's get to an exclusive then. Sources tell CNBC-TV18 that Federal Bank may be looking at raising capital from a large QIP. Abhishek has the details. Abhishek.
Well, sources do tell CNBC-TV18 that Federal Bank is looking to raise money via QIP soon. So the QIP size could be with a base issue size of about 2,000 to 3,000 crore. And then depending on the demand, the size could be scaled up to as high as 4,000 crore for the fundraise. So indicative price band is around the 123 to 125 rupees per share. And a lot of interest has come in from domestic as well as international houses houses. Now, the calculation shows that a QIP of 4,000 crore rupees at a price band of about 125 could mean 15% equity dilution and about 18.6% increase in the overall capital level of the bank or the net worth of the bank. So tier 1 ratio can increase to about 16.25% when compared to 13% that they had as of FY23, and book value can increase by 3% to about 104.7 per share from 101.6 per share that they had as of FY23. We have written to the bank and we are still awaiting a communication from them. Back to you.
All right, Abhishek, thanks a lot for joining in, filling us in with that exclusive story. Well, moving on then, ONGC, that's the top loser on the Nifty. It reported a net loss of close to 250 crores after providing a one-time of around 9,200 crores for tax disputes. We caught up with the management of the company to discuss the numbers and the guidance going ahead as well. Let's listen in to what Mr. Pankaj Kumar, the Director of Production at ONGC, had to say on crude and gas production, as well as other details.
Q4, a provision has been made with respect to the GST on royalty. This was an issue going on for past quite some time, and it's under litigation, though ONGC has got a different view on this. ONGC is always contesting on this, and but at the same time, since the amount was big and showing a big hurt, ONGC has provided for this in the fourth quarter. As far as crude and gas production is concerned, the crude production vis-a-vis 21-22, the decline has been stopped. This year's crude production, I won't say was up with respect to 21-22, it's hardly 0.2% or something. But gas was, yes, little less. But rate of decline of gas in last 2-3 years, we have again been able to arrest that. This year it was, I think, declined by minus 1 point something percentage. So overall, we could arrest the decline. The coming year, definitely, we expect to increase our oil and gas production. We are going to add crude oil from KG block this year, somewhere in Q3. And at the same time, we have taken measures with respect to the very strong reservoir management as well as reduction in operational losses, increase in efficiency, and we expect to increase crude oil production where we are. This year's crude oil production was around 19.5 odd million tons. We expect it to take it to 21.2 or 21.3 million tons in the year to come, that is 23-24. Similarly, the gas production this year has been little over 20 BCM. There also we want to add almost a couple of billions more.
Okay, well, ONGC management there with some perspective on the numbers. Anand Tandon is with us. There's 15 minutes to go for close. Anand, good afternoon. Good to have you with us here. Will new highs beget newer, higher highs, or one needs to be a little cautious now? What's your sense?
I don't think that there is anything which is going to be spooking the market anytime soon. I think most of the macro factors are all lined up for perhaps new highs coming through.
Okay, uninterrupted all the way to, as many are pointing out, 20,000 kind of levels on the Nifty?
Well, it's never going to be uninterrupted. I'm sure there'll be ups and downs, but overall, you cannot be trying to play every single up and down. So the direction for the market right now is up, and you just stick with it till you have reason to change your view.
As they say, if you decide to sell, you have to make two decisions. You have to decide when to sell, at what price to sell, and then you got to decide to buy it back, right? So, unless your view changes, which, as Anand is pointing out, there is no reason to change the view. Stay put. Well, 18,600 is where we are at, 100 points higher. And HDFC Twins are doing, basically both those stocks are doing very well. Any thoughts here? HDFC Bank, many were blaming for this one for the underperformance of the Bank Nifty, but it's starting to correct. There was an analyst meet which was held, I think, earlier last week. And the management sounded very confident on being able to grow the business, the merged entity, at the same pace, same rate as before.
Well, so far they have not had a problem in terms of growth, right? Other than the fact that they were held back because of certain technological issues which they need to sort out. Otherwise, more or less, they have been the most consistent performer in the entire pack all through so many years, both as individual companies there is no particular reason to assume that just because they will merge, that will change. The question really is that there was a bit of a technical overhang that will happen because of the reduction in some of the global indices. But I think that is an opportunity to be actually getting in. You actually are getting the stock probably cheaper than you have seen in most of the last decade on a valuation basis. And given the overall macro within which banking sector is operating, which is all positive, and especially for private sector banks, it would be a missed opportunity if you were not to use any weakness to have bought HDFC.
Hi Anand, good afternoon. Anand, one stock that's taking a hard knock is Balkrishna Industries. But I've seen this in the past as well. They have one-off bad quarter. The markets absolutely trounce it. But in the coming quarters, somehow or the other, the numbers look up, or and at times I've seen them scrap capex plans as well, and we see a rebound. Any view on the stock? It's down close to around 7.5–8% now.
Well, I don't actually track that to be able to comment in any real sense, other than the fact that it is not a regular tire company. It is working in spaces which the regular tires don't operate in, and to that extent, they have a little less cyclicality than most of the other tires. But given the fact that there is a lot of uncertainty in the global markets, and this is also one of those that will be driven by some of that, I would imagine that some of the outlook may be a little more cloudy than normal. But really, I don't have any deep understanding of what the numbers are right now.
Anand, anything in the pharma pack which caught your attention this time? There have been quite a few hits. Piramal Pharma was quite strong. Hospital numbers have been good, whether it's Fortis, Medanta, Narayana. Anything which caught your fancy?
I think most of the pharma, especially the API, is something that I've been bullish with for the last few weeks. And I think I continue to maintain that view. I think the API price pressure that you saw in the US is slowly receding, and I think you will find that from here on you'll be able to get better yields. Even a couple of the major companies, even companies like Dr. Reddy's, for example, have decent pipeline of products, which even if a couple of them were to click, you would see considerable upside. The hospital space, of course, companies like Aster and Narayan have done exceedingly well, and I would imagine that at least Aster, for example, with a divestment coming up, may actually continue to do reasonably well, given that it's not particularly expensive vis-a-vis the other parts of the sector. So I think there is a reasonable amount of growth that can be expected. The domestic market's doing well, and with the international markets picking up, especially on the API side, I think pharma is in for better times.
Okay, all right. Anand, stay with us. We'll slip into a quick break here, but as we do that, here's a quick programming reminder. Future Female Forward is headed to Hyderabad this week. Cash industry leaders share some insights on creating an equitable workplace on the 31st of May, only on CNBC-TV18.
ट्रेडिंग shouldn't feel like this, इसलिए हमने बनाया ICICI Direct Flash Trade, जो देता है clutter free experience, quick entry और exits, live tracking के साथ, सिर्फ ₹7 per order. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Analyzing a big bank's data, no big deal.
Go on.
Well, what if you partner with IBM and Red Hat, use a hybrid cloud solution to connect data across multiple systems globally, then analyze all that data with Watson?
Okay, but this needs to meet our...
Security standards? Yep.
Compliance standards?
Mm-hmm.
So they get the insights they need.
Yep.
In real time.
Check.
To make quick decisions.
Check.
And check.
That's the hybrid cloud solution IBM and a global bank created. What will you create? IBM. Let's create.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से नहीं
आपको
नहीं तो कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने नहीं मूर्ति कोई फायदा नहीं
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Welcome back. Well, just focus on Metropolis Health. You know, that stock has taken off, actually. It was more or less flattish. Now it's up closer to 2%. And bulk of that has been since the time we started off the show, actually. So that's one of the stocks that are doing well. Tata Power as well is powering ahead. So that's another frontline gainer out there. And BEL has now moved to the high point of the day. Well, good time to get into market opinion. Let's hear out some top sectorial bets of Saurabh Mukherjee of Marcellus Investment Managers. He spoke to us earlier today.
They've been growing their loan book consistently at 22-23% for 20-25 years. I think the last 4 years, HDFC Bank would have compounded about 4% share price compounding, in spite of the business compounding consistently at low 20s. So difficult to say that, you know, with India's best franchises, the share price fully reflects the upside. We doubled our position in November, December. So I think Jan of 2022, Jan 2022, it was 2.5% of our portfolio. Now it's close to 7-8% of our flagship portfolio consistent compounders. We also added it to our mid-cap portfolio. We added it to Rising Giants earlier in the year. And, you know, our view is relatively straightforward. This company is the world's 5th largest manufacturer of active pharmaceutical ingredients, the largest in India. As is evident from reading the newspapers, there is a big shift globally away from Chinese API. Chinese API is 90% of the global market. There's a shift away from that towards Indian API. In the Indian context, the global majors that we talk to keep highlighting that Divi's is the most credible manufacturer of active pharmaceutical ingredients. Think of Bhargav Dasgupta and ILOM team as the capital allocators par excellence in general insurance. When rates soften, they pull back. So their big call over the last 5-6 years has been anything to do with agri and crop. They are not interested in writing, right? And as they have throttled off big time on agri and crop, obviously that part of the portfolio has shrunk. In motor insurance, they remain the market leaders and both in terms of profitability and in terms of market share. In motor insurance, they are in a way the pioneer and the Indian equivalent of, say, Warren Buffett's Geico. In life insurance's case, we've seen LIC consistently lose share.
Anand, any thoughts on names like Page Industries, which did correct a fair bit post results? Have you owned it in the past? Do you plan to?
So, you know, that area of the market has actually suffered because of high input prices for most of last year. But that has moderated quite considerably. And to a large extent, many of the stock prices have corrected. So, you know, I would imagine that from this year onwards, you should expect to see a fairly significant revival in terms of market performance and underlying earnings growth for this sector. Whether you want to own Page, given its evaluations, or any of the others in the sector, is a matter of choice. I think, you know, companies like Rupa, etc., for example, also merit a look.
Okay, Rupa also merits a look. So you're saying that at some point this year, these stocks will start to bottom, Anand, right? That's your view?
Yeah, in my view, I think, you know, the worst in terms of the prices is already behind us. In terms of their input prices, and consequently the margin expansion should start to happen in the current year, and that should obviously mean that stock prices will also react positively.
You know, Page Industries, it's not the first time that it fell so much. You know, in the past, there have been numerous times, I think 3 or 4 occasions where post its numbers it fell. I'll just tell you, in 2015, 2016, in that time it fell closer on 35%, you know, that time. Between October 2022 and May 2023 as well, it's lost a fair bit, 30%. And even earlier in 2018, it was down. So We have seen these sharp dips out there. So let's see what.
But does it recover?
It recovers, yes. It sees a big bounce
so
back.
over the last, say, 2 or 3 years?
In the last, in the last 7 years, there's a couple of data points out there where these stocks have seen a sharp correction, and in all the instances, it has recovered in the times to come. So, we'll try to put in that data point in better detail, but I just found that out.
We just have I have the 1 year data in front of me. There the stock hasn't done too much.
Yeah.
But of course the fall has been so recent in the stock. It took place only on Thursday or Friday. But year to date the stock is down 11%, and in the last 1 year the stock is down close to about 15%.
Remember stocks like Page, we forget how far there we go. Yeah. So I'm looking at a sort of yearly data, and it's incredible to imagine that 10 years ago stock was at $500, right?
Wow.
Approximately about 500 rupees or so. Actually, no, sorry, 2011. In 2009, it ended at 660 rupees. In 2010, it moved up to about, I think, $1,500. But it's at 38,000. I think
it's a 57x, 55x, roughly.
Let me just plug in that data point.
Yeah.
The stock fell 36% between May 2015 to Feb 2016. Post that, that's between Feb 2016 to August 2016, the stock jumped up 230%, so it made up all its losses. The other instance that I'm looking at, when in fact the stock fell, was 48% in August 2018 to August 2019, and post that is from August 2019 till October 2022, it went up 200% again. So history suggests that it normally makes up, and maybe that 500 rupee,
Just imagine 50x from here on. What would that value look like?
Look for something else. All right, that's a page for you. Anand, thank you very much for joining us. Good speaking with you, and it's always a pleasure. Well, you got the market, which is up, 92 points. We'll end in the green, about 20-30 points off the high. That's about it. The Nifty Bank will come up on your screen as well. That will end about 280 points in the green. That came off a little bit more from the day's high, which basically was 44,483, and we'll leave off at about 44,300. So almost about 180 odd points off the day's high. The mid and the small cap parts of the market, 1/4% of the small cap index, and I think the mid cap index ends about 1/3% higher. Market breadth is, it converged. 1,230, almost 1,300 stocks higher and about 1,040 stocks lower. So broader markets doing very, very well. The HDFC twins adding a fair bit to the gains on the Nifty. Reliance contributed like the last two sessions, and ITC contributed in good measure as well. Rima.
Well, it was that sort of a day, right? The opening tick was the highest point on the index. Yeah. And if you took your money off in the first 5 minutes, you could have had the rest of the day free, because we never really went above the first 5 minutes high, but we came off and we ended closer to the low point of the day. Not to say that it's a change of trend. The markets are still in the upward trend, but maybe it was the day to take some money off the table. But on that note, though, we have run out of time on this edition of Closing Bell. But you don't go anywhere. A very special conversation with Mr. K.V. Kamath on the show. State of the economy is lined up on the other side.